Hello, welcome to my channel. Today I'm going to be going over Bank of America. We're going to be diving into the stock, looking at some financial stuff, not super deep, but just also my personal opinions on it as an investment. You know, not necessarily a trade. Trading is cool. That's cool if you're into that. Not personally what I cover a whole lot on this channel necessarily, but hopefully you can find information about this stock in this video, even if you are more of a trader. So first thing I like to do whenever I look at a company, the 1 year, the 5 year chart, and then the 10-year chart, but all time also works as well, right? So obviously what sticks out to me is this incredible run up into about 2007, and something happened with banks in 2007 and 2008. So we all know about that. I'm not going to dive into that in this video, but I think all of you know, if you're watching a stock video about a bank, the risks that involve with banks, or at least the risks that happened in the past where they had a fairly large implosion. They had not a good time around there. So understanding some of the risks of banks, I mean, a lot of that regulatorily has been at least attempted to be solved, but I mean, of course, there is, outside risk with that. But anyways, the 5 year doesn't look super appealing. The 1 year looks great, 43%. The 5 year looks meh, but if you look at the 10 year, and honestly, that's weird. That's not the chart we want. Is this glitching? This is not the all-time chart. 5 year all-time. There we go. I don't know if you saw what I saw, but it was not loading for me. So if we look at 2014, which would be like the 10 year, honestly, it's had a pretty great run since 2014, at least for bank. I mean, it's up over double, which compared to the S&P 500 isn't as much. But then again, it pays a significantly higher dividend than the S&P 500, and S&P 500 obviously has grown a lot because of tech primarily. That's been one of the leading catalysts. I mean, if you look at all the largest companies in the world, they are all tech dominated. So investing in Bank of America, you're kind of diversifying and making some of the assumption that obviously some of the high upside that comes with tech stock is just probably not in the cards with this. So if we're diving more into like the risk reward ratio of that, it's something you have to consider. Although first off, let's dive a bit more into financials. Market cap, $304 billion. So this is a huge company. This is not a regional bank or anything like that. I know most of you know that, right? I'm not like dropping some truth bomb on you or anything, but it is important to just understand the size of the company, right? Let's look at PE and forward PE. Okay, PE and forward PE. So its forward PE is lower. I like that. It generally means it's growing, not always. I like to look at PE and forward PE together, because it doesn't always show the full picture if you just look at one. For example, AMD's PE is like 200 and its forward PE is like 45, right? That's a completely different story. Obviously, it's not as much here, but that's not too surprising. So obviously, well, maybe not obviously, but the S&P 500, I think, I thought it was in the low 20s. I heard the other day it was in the high 20s, but either way, S&P 500 is significantly higher than the PE here. All right, so it is a low PE, but for bank stocks, they generally aren't going to grow like a tech company, so they do have lower valuations. And this is actually, from what I understand, I'm not talking about regional banks, but some of the larger financial institutions, this is probably somewhere in the middle, maybe slightly low, but I think Morgan Stanley's around 17.5. I just did a video on also, I know Morgan Stanley's not just a bank, but it does other investment stuff. I just did a video on, I'm drawing a blank. It wasn't CD Bank. It was, sorry, give me 1 second. Oh my gosh. It was Wells Fargo. Wells Fargo, and their PE is right around 11. So, and that doesn't seem like that much lower, but 14 to 11 is actually what, 20%, 25, something like that. So it's somewhere in the low middle. So it's not actually that low, but it's still a great price point, right? That's the other thing as an advantage, right? When we're talking about full market, going down with tech stocks, especially ones that are more vulnerable, maybe those that are not profitable or barely profitable or rely on high amounts of debt to grow. if the market does have a downturn, like COVID, you may lose, what this looks like roughly, right? This isn't perfect, but fell from 35 to, 20, right? So it's still a substantial drop, but you aren't going to lose 80% of your value or 60%. You may lose 30 to 40. So, and it's also just a hedge. Or a hedge or diversification. I more so meant diversification, in the sense that, I love tech. I'm mostly in tech. Tech is great, but it's important to have things in other sectors like REITs. I have some utilities companies I've done great on, and banks. Obviously, I guess one thing we can observe, maybe it's easier on the 5-year chart, since the lows in 2023, but even more as of recently, like a lot of these bank stocks have gotten a boost with rate cuts and all that. So, let's dive into some risks, right? Like I mentioned earlier, I guess you could say it as a risk, but more risks / downsides is you're never really going to have that like 300% year in the stock, right? Part of the thing about holding, what we witnessed in NVIDIA, right? You don't expect that with every company you hold, but with tech stocks, you can kind of be like, yeah, if these guys hit it out of the park, this thing could double this year, right? Triple, go from, rise 200%, which would be triple, because 100% would be double. You're not really going to get that with a stock like this, right? But it's fine. It's fine. I guess one thing I should dive more into is the dividend. 2.65% dividend it's great. It's good. For the growth you have with it, right? If you look at the 10-year, that is rather good. Certainly for non-tech. 2014, right? Yeah. 17 to 39, so more than double with a 2.5% dividend. I don't know the entire dividend history, but it's a bank. I'm assuming it was roughly within that range the entire time, right? I'm making that assumption, but assuming it was, like that applies into it as well. Like that is a good factor. And I think if you have a dividend portfolio that's more geared towards matching or slightly beating inflation along with paying a dividend, maybe 2.5% to 4% range, right? Like this is a stock you may want to include. You may want to include it in that. Obviously, there's different types of dividend portfolios, but yeah, it's one maybe if it's more geared towards breaking even and getting maybe that higher 5, 6, 7% dividend yield, which I personally don't prefer those. Although I've seen many, at least online, of people that do like that. If that's your thing, awesome. But this probably isn't a stock for this. Probably, and I personally would tend more towards that 3.5, 4%, along with matching inflation, because then I don't got to worry about, okay, well, I got all this money from it. But anyways, that's kind of a different story. Let's dive into what some people think. Schwab gives it a C. This is its 1-year performance, so it thinks it's slightly below average for 1-year stock performance. I think it's average. And don't get me wrong, like average stock, if you're looking at that, right, the average stock does pretty well, right? They expect you. I know C, we always think, we need grades that are B's and A's, right? But C, the average stock does pretty well. It's the F's and D's you got to avoid. But even then, this is 1-year share price. And one of the stocks I hold, AMD, almost every time it's either been an F or a D on Schwab, almost every time. And it has performed over the time I've held it for like 3 years. Not the entire time, but certainly as of recent, it has performed much better than what they say. So, economic melt wide, I agree. I kind of hate the 0, 3, 10 scaling they have here, right? None, narrow, wide. I hate that. But I would lean, they have a nationwide presence. Like, this is not a small company. There's not a lot of banks in the U.S. or even around the world that have, a bank everywhere. So, okay, I guess we should dive a bit into what they do. I think we know provides banking, financial products, service for customers, small, middle market businesses, yada, yada. They're a bank. They do banking. It says banks here. That's just, you all know what a bank are. I'm going to assume that, right? So, and we can dive into, they do this and they do that and they do this and they do that. But at the end of the day, it is a bank, and it either is growing or it isn't. This is a bank. It is growing and it is doing decent, right? So, market edge, avoid. Okay, buy. A ESG score, whatever you think of that. Yeah, so we can dive into this. I keep forgetting to look into the analyst side on this for my videos. I'm just not used to it because honestly, I'm going to be honest with you guys. I really do not care what an analyst has to say, right? I think some of them provide great information. If you just purely followed what analysts think, would you make money? Yes, but only because almost every stock goes up in value. You know, like what, 70% probably, at least in the S&P 500, right? If you take the top, yeah. Why don't you just buy every stock that, I almost just suggested, why don't you just buy every stock that makes money and don't buy the ones that don't? Like, whoever thought of that, right? But anyways, I mean, generally that's what the S&P 500 does because companies that do not perform well enough to stay there fall out of it. Anyways, that's a side tangent. I think analysts are fine. I like to listen to them. They know, they have expertise, but they also have, sometimes they have agendas, sometimes they have biases. You know, if you really like this stock and you cover it all the time. I know they usually cover more than one, but still, right? So, but it's still good to see kind of what people are saying. So they do think it's a buy right now. Actually, yeah, I don't know. I mean, I guess some people jump in and out, either rating it the month or maybe new guy on the block that just gives it a rating, but it's different. But more people have jumped in to say buy and only one guy says sell. So whatever you think of that. I know, I think Buffett's been selling off quite a bit, but that's just diversification, right? He is like 30% cash right now. We won't get into these today, but banks do rely on large amounts of debt, similar to utility companies and things like that. Here's, I guess, what they think it'll do compared to other banks. I would assume Royal Bank is not American, and I'm almost certain Mitsubishi is not either. But anyways, I kind of don't like when they compare country to country, even if it's roughly the same. Anyways, I don't have too much more for this video. That kind of covers the basics, at least. You should hopefully be able to get a good understanding of where you stand on this company if it's something you want to invest in. Me personally, I do not own any Bank of America. I would consider buying it. It's probably not on my short list. I personally prefer Morgan Stanley in this sector right now, and I don't have enough capital where I command, hundreds of stocks at this point, or even triple figure stocks. Most people don't. That's kind of a lot, but I personally just view other investments as better, at least in the short time frame. However, if you want to invest in the stock, I do not think it's a bad investment. I wouldn't say I don't think you're making a mistake, especially if you like bank stocks, you like this sort of thing, right? If this is your forte, if you understand it better, totally understand, totally get it. And honestly, at least according to this, there is a lot of upside on the analyst price targets, and I do think there's definitely some upside even in the short term. I like to look 3 to 5 years. 3 to 5 years, this company will be doing fine. At very least, it'll hopefully maintain value and pay a dividend. If not, and it's falling, it's likely, maybe something market related, and you can scoop up more shares, right, when it's low. So anyways, I like the stock relatively well. It's a fine stock. It's not something I would put in my avoid category. I think it's a fine stock. So just not something I'm clamoring to get. Why did I cover it? I like talking about stocks. I love stocks. I love looking at charts. I love talking about them. That's why I'm making videos on it. So if you have any input on that, leave a comment about it. Any of your opinions, maybe some insight that I don't know about or did not cover in this video. If you also made it this far, you could leave a like. I'm a new channel and I'm just trying to grow, so I would appreciate that a lot. Or subscribe if you want to stay updated. Anyways, I appreciate you watching this far. If you made it this far, and I'll likely see you in the next video. So see you later.